Hi, this is Randy Finney with Right Side of the Chart, and today's Friday, February 16th, 2018. Just a quick reminder, Monday, it's President's Day. The markets are closed. It's no trading. I'll also be leaving town today, cutting out around lunchtime. So I'm going to get this video out. I'd like to just do a quick update on the markets, very brief, and then maybe touch on a few trade ideas if there's time. So I will be in the trading room up until again about noonish today, 1 o'clock maybe. All right, starting out, this is the SPY. Yesterday we hit the first target on the official long trade, and the story on the SPY was, and the markets in general are looking for this, this possible scenario that did play out, that divergent low undercut those recent lows. My thoughts are this: I posted yesterday in that update that I booked profits on nearly, not all, but most of my index longs. I think we're primed for at least a pullback or a consolidation here. It's been a strong run off the bottom. If I look at just what we did, and again, these are the chart you're looking at here shows regular hour trades on the SPY, not any of the futures that show the after hours and overnight session trades. We're already up 7% in not even a week. So, if you were able to, had the gumption to step in and buy on that when we undercut those lows, I thought it was a great time to buy. And although I didn't add the official trade till a little after, I wanted to have evidence. Official trades are where I have my highest degree of confidence. But then again, I think there were some of you that caught it there. 7% in a week. Depends on your time frame. If you think you caught the lows, which you may have for a move to new highs, great. Set your stops, keep the stops where they are. If not, as an active trader, I think it's prudent to book some profits here. And I'll show you why. We'll look at a few other charts. But there it is. Intra So far this morning, we hit a high. Futures were up earlier, 274.53 was the high in the SPY, so just a little shy of my second target. And we'll look at a couple other things here. Here's a SPY again on a 60-minute time frame, and I put up some Fibonacci retracement levels. What I'm measuring is to the lows from the recent high to low. So this measures that correction that we just had, and you can see we're just shy. In fact, we just nailed it in intraday. I'm sorry, in the pre-market session. And I often talk about this. I follow futures. I also have a monitor when I get up every morning, and I flip to that mosaic after the market closes at 4, called my after hours pre-market session trades. It shows the SPY trading, and where I was going with this is very often key levels, whether they're price targets, whether they're key Fibonacci retracement levels, are hit in the after hours or pre-market sessions, and that's where you get the reversal. So although you don't see it here because this only reflects yesterday's close, again we hit a high of 274.53 in pre-market, which took us just above that key 61.8. Here are the fib retracement levels right here. QQQ, a little stronger, and that's always the case. The Q is what I refer to as a higher beta index than the S&P 500, because it's just a lot of tech stocks, things that tend to move up and down more so than the more broadly diversified S&P 500 that has a lot of utilities and REITs and steady Eddie dividend stocks. So you can expect a stronger bounce on Qs. Qs are, in pre-market, they hit a high of 167.05, which you can see they just went over this 76.8 fib retracement. Flipping over to these future charts, the same story. If you're new to the site, this is what we were tracking for a while, this primary uptrend line in the broad markets. I was using the futures charts, and this is where we got our big sell signal when they all broke. They all broke at the same time, the Dow, the S&P 500, and the NASDAQ. So there was our sell signal. There was our correction. And this is that scenario I had laid out of undercutting the lows. You can see that the futures did so on the S&P 500 and the SPY. We had the same divergent low on the 60-minute charts. On the Nasdaq, I think it was roughly equal. But either way, this is more important. Again, this is why I like to watch the futures, and as well as SPY and QQQ in the after hours and pre-market sessions. So this was the big divergent low. This was our buy signal. Everything that I was looking for has happened. Those daily and weekly trend lines have held. So far so good. But what I'm speaking to now is the very near term outlook. What I'm seeing is when we fast forward or zoom in on this chart, you can see what I've drawn here. We now have a divergent high on the 60-minute time frame. And as you guys know, that's my go-to swing trade time frame. So when I see a divergent high after a 7% run on the lows, um, that tells me at the very least, the risk reward to remaining long is no longer very favorable for the very near term. Again, I have to really separate that because I know a lot of you work full-time jobs, you're not active traders, and that's fine. And I still think that there's a good, very good chance that these lows that we had here for a while will be the lows with more new highs to come. However, um, do you want to ride out a correction as a swing trader? If you made seven, or if you took a leveraged, any of the three-time leverage ETS, SPXLs, the S&P 500 three times, TQQQ, three-time leverage. A lot of people, because I expected the move to be pretty swift once we reversed. And as I've stated, those leverage ETFs, you don't really suffer decay in a what I call refer to as a fairly unidirectional move. This is a unidirectional move. This is a unidirectional move. This is sideways action. So that's where you don't want to get caught up in those. And I guess that's it. Bottom line is, I think it was time, at least for me, to take some profits. Where we pull back to, really don't have the lines. I'm going to wait and see what happens over the next few days. Like I said, being that I'm leaving town early today, and the markets are closed Monday, that also played into my reasoning for closing out, booking profits on the index longs yesterday. But you can see there's some support levels down along the way, and I'll follow up with a video when I get back from out of town. Yeah, probably on Monday night before the markets open, and try to look where we're going to go. And again, we may continue higher, but with divergence in place, with a 7+% run. In fact, I believe it was more than that if you look at the futures off the highs to the lows. 11.15%. That's what the measuring tool is showing me there. So that's 11% without even so much as anything but these little blips. We could be looking at least some consolidation. This level here on the future, 67.04, it was a support level on the way down that may contain a pullback here. But again, I just think the very near term, next few days, especially heading into a 3-day weekend, risk reward is not very favorable in my opinion. S&P 500, same story. Actually, that's on the 60-minute chart here, the futures. You can see we made an equal low, and I talked about that. What I'd said at the time. When you see these sharp corrections in the market that come out of nowhere after an uptrend, very, very rarely do you just see that correction end and then the markets continue chugging along. Much more often than not, you see a second test of those lows. That second test can either fall a little shy. In this case, on the futures, at least, it was an equal low, or more often than not, it's usually an undercut of those lows, which happened actually on the S&P 500 cash index, which also is with the SPY tracks. And there it is. So you can see again, divergent high here, not a very big one. So therefore, I'm not expecting anything close to this move. Typically the move following negative divergence or positive divergence on the 60-minute charts, or any chart for that matter, typically, not always, it's usually commensurate with the scope of the divergences, meaning this was very large, powerful divergent low, especially on the NASDAQ 100 futures. Therefore, a pretty sharp move so far. This is a small divergent high. So one scenario too is, we could just be looking at a little grind here for the next, you know, throughout today and maybe into next week. But I do favor, ultimately at least some weakness down to, I would say, at least this level here. You can see pretty decent support level there around 226.70, maybe 26.80 or so. All right, enough on the broad markets. We'll just look at the trade ideas real quick. Um, you know what? No, let me get this video out. Let's keep this one short, and then I'll do a separate video updating the trade ideas for the members of the site. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.